Hello viewers, my name is Ashok Sen Gupta from School of Management Sciences, Lucknow. Today's topic is based on leverage analysis part 3. In today's session, we will discuss on the composite leverage. In previous two lectures, we discussed on the concept of leverage, we discussed on the types of leverage. So, concept of leverage means use of fixed asset and securities to increase the value of the equity shares holders or profit respectively. In concept of leverage, there are two types of basic leverage. First is financial leverage, and in financial leverage we were discussed on how we can use the debt or long term borrowing to increase the value of the equity shareholders. In operating leverage, we discussed how we use the fixed cost to increase the BP and operating leverage. How we increase the profitability, how we increase the operating leverage by using the how much fixed cost must be used. We should exclude our profit from the fixed cost, because we have to pay fixed cost either we use that area or not. For example, if you are having a warehouse of 1000 square feet and you are paying a good amount monthly as interest, but you are not using that warehouse properly and you are just using a small part of that, it will impact directly on your profitability. So, operating leverage say use the fixed cost properly, use the machines. If you have a machine and you are using that machine on rent basis, then utilize it properly. You can see in many construction sites, company hire mixtures, cement mixture machines, cranes from third parties. They are not owing that, they are from third parties, and they use that cranes and these kind of heavy machinery on day basis, per hour basis, etc., but they utilize it properly. So, their construction cost will reduced, or you can say by proper utilization of fixed cost we can increase the profitability. So, this is about the operating profit. Now, in today's class we will discuss the composite or combined leverage. This is the last topic of leverage analysis, and in this topic we are able to understand that how we can use both. This composite or combined leverage is the analysis of or multiplication of financial leverage and operating leverage. It is a blended mixture of financial leverage and operating leverage. This leverage shows the relationship between a change in sales and corresponding variation in taxable income. So, taxable income used in financial leverage and sales in used in where operating leverage. So, this shows the relationship how we can the change in the sales and corresponding variations with taxable income. If the management feels that a certain percentage change in sales would result a percentage change to taxable income, they would like to know the level or degree of changes. If management want how much change in the sales volume impact on the financial income or taxable income, they would like to know degree of change, कितना change होना चाहिए वो या कितना change हुआ. Hence, they adopt this leverage. Thus, the leverage or degree of leverage adapted to forecast the future study of sales level with increase and decrease in taxable income. This degree establishes a relationship between contribution and taxable income. So, composite leverage gives the relationship between the income and sales. Look, there are two aspects. Sales is different aspect and income is different aspect. Until and unless we not receive the amount which we sell in the market, receive the amount of product which we sell in the market, we cannot say we receive an income. There is a kind of hypothetical thing. That is why it is quite difficult sometimes. When if you see in your in trading account, we see that sales is 100 crore, but out of 100 crore only 20 crore is cash sale and 80 crore is credit sale. So, until and unless we receive the credit sale or receive from the debtor, till we have only 20 crores which we have by cash sale, and through that 20 crore the company cannot survive. So, recovery is also important. So, companies focusing also on that to recovering the bad debt or debts from the debtors. Similarly, he also focusing on how much change on sales, either positive or negative, give an impact on taxable income, because sales, from sales you can receive a gross profit, and after deducting the indirect expenses from gross profit, generally from gross profit we get net profit, and from net profit we pay the tax, and after that we get the taxable income. So, our income is also based on the sales. How much income is based on sales? So, income is directly proportionate okay. So, we know that sales minus direct expenses equals to gross profit, and by gross profit we less gross profit by indirect expenses, we get net profit. So, ultimately this amount depend on this. How the amount of change in the sales increase, it impact on the net profit, because sometimes expenses are fixed, some expenses are fixed, we have to pay the expenses like wages, salaries, other recurring expenses, loan amount. So, this is the concept in which we can a management of a firm able to understand the impact and relationship or degree of relationship between the contribution and the taxable income. So, what is contribution? We know that contribution is simply sales minus variable cost, sales minus variable cost is contribution. So, contribution equals to C equals to sales minus variable cost, and this is a decision making point. This is a decision making point because sale, if variable cost increases and compared to sale, contribution moves downward. In present scenario, we can see due to the increase in the fuel rate, either diesel or petrol, each and everything daily items cost increases. Similarly, it also impact on the firm also. The raw material cost will increase, it is variable cost per unit cost, because they are adding transportation or included, and transportation is based on the fuel prices. So, when variable cost increases and we cannot increase the sales price comparatively to survive in the market, except the firms like oil companies, they having their own cartel. So, they increase their firm prices and decrease their prices, and they are very few and they are doing the same, all firms doing the same. But generally in other companies, FMCG companies, durable item companies, they are not going to increase their sale price because of the huge competition in the market. But on the other hand, variable cost increases. When variable cost increases, sales remain the same, it impact on the contribution, and the impact on the contribution give direct effect on taxable income. So, how we can calculate the combined leverage? This is a simple formula: operating leverage into financial leverage. Operating leverage means contribution divided by EBT or operating profit multiply by EBT into divided by EBT. So, operating leverage is here, and financial leverage is this one, and when we cancel this and this by mathematical equation as a EBIT minus EBIT, then we receive C minus EBT, earning before tax. We can transform the value of C equals to S minus V also. C equals to S minus V. So, C equals to S minus V divided by EBT is the formula of combined leverage. It is its impact, contribution and EBT. Let us do some questions, so we can able to understand better about the combined leverage. A company has a sale of rupees 2 lakh. कंपनी के पास 2 लाख रुपए का सेल है. Company has a sale of 2 lakh rupees. The variable cost are 40% of the sale and fixed cost is 60%. sorry 60,000. Fixed cost is 60,000 and variable cost is 40%. Company is going on borrow capital of assume 20,000. Company interest on borrow capital is 20,000. Contribute the combined leverage, show the taxable income when sales increase by 10%. कंपनी का कंबाइंड लेवरेज निकालना है और अगर 10% इंक्रीज होता है अगर सेल तो टैक्स पे क्या फर्क पड़ता है. Okay, actually this is some long formula, so it is quite difficult. I am going to do this question here also. So, you can see we have a sales of 2 lakh rupees. Okay. Now, to find out the C, to find out the C, we need to subtract the variable cost, and variable cost is 40% of sales. So 40% of sales is 40% of sales is 80,000, simple. Now, we receive a contribution, we received a contribution. This is a contribution C. Okay. Now, less fixed cost. Fixed cost is 60,000. So, we receive 60,000 as a operating profit. $60,000 is now a operating profit. 60,000 is now a operating profit. Clear? Up. You can now find out the changes. Okay. So, we know EBIT is now 60,000, EBIT is now 60,000 less interest. What was the interest? As per the question, the interest was 20,000, interest was 20,000, interest was 20,000. Okay. So, interest was 20,000. We subtract interest from here and we receive 40,000. This is earning before tax and after interest. So, EBT, earning before tax and after. So, in combined leverage we know the formula, C divided by EBT, C divided by EBT. So, here C equals to we have this one 1,20,000, C equals to 1,20,000 and EBT is 40,000. Combined leverage equals to 1,20,000 divided by 40,000, 3 times. Combined leverage is 3 times. So, combined leverage is 3 times. This is half question. Combined leverage is now 3 times. Additionally, in this question this is given that what will the impact if the sale volume increase by 10%. So, how we can calculate how it can impact. So, just I am going to rub all these things. So, value of the sale increased by 10%. So, 22 lakhs into 10%, that equals to 20,000, add 2 lakhs additional previous. So, new sale is 2,20,000, new sale is 2,20,000. When sale increases, variable cost increases, and variable cost is 40% of sale, variable cost is 40% of sale. So, variable cost equals to 2,20,000 into 40%, 88,000. So, from here we can find out this is sale less variable cost, 88,000, 88,000. Now, we receive 3,20,000. We lack 3,20,000. 2,20,000 minus 88,000. 2,20,000 minus 88,000. Variable cost contribution is equals to 1,32,000. From 1,32,000, if we deduct fixed cost remains the same. So, here fixed cost is also 60,000, remaining balance is 72,000. This is operating profit, EBIT. This is operating profit, EBIT. Now, if from EBIT we deduct the interest, borrowings 20,000, we deduct the borrowing 20,000, we have 52,000 now. This is EBT, this is EBT. Same, combined leverage equals to contribution divided by EBT. Contribution is 1,32,000 divided by EBT 52,000, and we receive the answer 2.5. So, 2.5. This shows that if we increase the EBT by 12,000, taxable income will increase by 30%. So, difference is this and this, and difference is 12 divided by 40 previous. So, taxable income increased by 30%. So, when we increase the, and it impact on the degree of leverage, it will impact on leverage. Initially it was 3 and now it is 2.5. So, it is quite clear that increase in sales 10% increase the taxable income by 30%, increase the taxable income by 30%. So, this is proof. Another question, sales is 10,000 rupees to 12% selling price, variable cost 5,000, fixed cost this one. So, here variable cost is this, less this 2 lakh आ गया, फिक्स कॉस्ट भी कंट्रीब्यूट किया, ऑपरेटिंग प्रॉफिट आया, इंटरेस्ट घटाया, ईबीटी आया. ये मैंने पहले बता चुका हूँ, ऑलरेडी did that. So, financial leverage is EBIT divided by EBT. So, financial leverage is EBIT divided by EBT, this one. this is EBIT and this is EBT. Okay. Operating leverage C upon EBT, C upon EBT, I am sorry, C about EBT. This is operating leverage, and when we multiply both of them, then we get the combined leverage, we get the combined leverage. So, similarly, we have a question that capital structure of company ABC have ordinary share 5 lakh rupees, debenture 110%, sales 50 lakhs, increase in earning per share, degree of leverage in EPS. So, sale price we having this one, वेरिएबल दिस वन, कंट्रीब्यूशन लेस कर दिया इसमें से हमने देखा, फिक्स्ड कॉस्ट फिर लेस किया तो ये बचा हमारा ईबीटी आया, ईबीटी में से डिवेंचर इंटरेस्ट घटा दिया हमने तो हमारे पास प्रॉफिट बिफोर टैक्स आ गया, टैक्स भी घटा दिया तो इक्विटी शेयर वालों के लिए आया, तो इंक्रीज इन ईबीटी ईपीएस हमारे पास कितना आया 5 to 9, इसमें इंक्रीज करने पे फाइनेंशियल लिवरेज पहले 2 था अब ये आया, एंड ऑपरेटिंग लिवरेज 2 से ये आया. So, this is a comparative study where we can find out the operating leverage, earning per share and leverage. Okay. So, friends, hope you will understand the topic of leverage analysis. Today is we understand the combined leverage, which is basically a mixture of financial leverage and operating leverage. It is a contribution divided by EBT, and this combined leverage help for to understand the relationship between sales and the taxable income. Hope this video helpful for you. Thank you for watching this video.